Hi everyone, welcome back to the podcast again. I hope you had a wonderful Saturday evening and you're recovering well on this Sunday morning. Yes, yesterday me and Dhana did tend to meander here and there, and today Dhana's told me to be precise, exact, concise, and stay to the script. So I shall do that and not mince any further words. So Dhana, what are we talking about today?
Today I come with the auto stocks. Auto stocks plunged up to 12% and during the festival demand concern and paint mode down in red. So Indian auto index stocks are nearly plunged down, especially the Bajaj auto, 11% to 12% down in the October 17 and 16 trading session. So the two-wheeler and the three-wheeler sales also dropped. So what are the numbers they are expecting in the festival season that was not coming into the
Wait, when you're saying drop, you're only talking about sales numbers. You're not talking about stock numbers, share numbers. You're not talking
share numbers are nearly plunged to 12%. Sir.
So shares has come down
to
and 12%, and you're saying sales are also down. There are two separate things.
Sales also down.
Because share price going down is on earnings previous, what's trailing earnings. This sales going down, this earnings is only going to come in the next quarter.
No, sir.
Right? Last quarter itself, the sales were down. Okay. Right.
September sales.
Right, understood. Okay. I just got lost a little bit. So,
Bajaj Auto projection of just 3% to 5% growth during the festival season fell short of the market expectation. Well, the below industry expectations of 8. So they are expecting 8. The sales projection are around 3%. And the entry level two-wheeler segment, if they are offering the offers and discount up to 5,000, 6,000 on the models of around 65,000 ex-showroom price, that also struggling. It's struggling to regain the momentum that what done in the 2020 level. Biggest competitor and rivalries of TVS Motors and Hero MotoCorp, that also 4.5% dragged. So as the result of the Nifty Auto Index plunged totally 3.5% today. Bajaj Auto, sir, if you are taking a particular stock of Bajaj Auto, 12% decline. That was a significant level since the March 2020 it was dropped. So after the 4 years. And the other major players like Hero MotoCorp, Eicher Motors, TVS MotoCorp, that also around 4% drop. Even it was affecting the car sales also. Maruti Suzuki India, Mahindra and Mahindra, that also faced in the declining of around 2 to 3%. And its auto sector overall slump into the 7% loss in the auto index. Then the final thing, the same happened in the Tata Motors results also. So they are expecting the results are not coming, plunged down into the 2%. Tata Motors also. And the downward pressures in the CNG segment of the Bajaj Auto, CNG segment and EV segment, mixed segment, that also in the pressure. Even if the entry level sales of 125cc and that also driving the company domestic sales of 75%, that also dropping. So the company was planning to diversifying into the CNG and electric two-wheeler, green vehicles, and including the three-wheeler accounts for the 44% of its domestic revenue. Bajaj Auto introducing the Freedom 125 CNG motorcycle model. So this was the first kind of model encouraging the lower fuel cost and higher mileage and comfort-oriented product. Now the September sales of units is 10,000 units. Plans to sell more than 18,000 in the October. So they ramp up the production capacity to 40,000 in a unit by the financial year 2025. So overall sales expectation was not meet up. So that's why the Bajaj Auto shares were fell down. Even now also the sales are not recovered from the level of the 2020. So what will be the effect of the Bajaj Auto and Hero Motors, TVS and even the Tata Motors and Maruti Suzuki? So they are also struggling.
Well, there are two things to keep in mind here. Right, the price fluctuation you're seeing in the stock market is not based purely on these results. The FIIs, like we said in the last video, have already pulled out 65,000 crores in the month of October and we're only halfway through. So the way the trend is continuing, this month is going to be a month of reckoning as far as FIIs are concerned. They all want to move to China and they seem to be very clear on that, and they seem to be selling everything and anything. And yes, because if you see, they've been holding, let's say Mahindra like for 1 year, it's up 87%. Bajaj, any company you take, you've been holding it for more than a year, you're making 100% plus or near 100%. So there is no reason for them to hold on to it anymore. They were sitting here because there's nowhere else for them to go. 1 year back, we were talking about how wonderful the Indian market is, right? Because China was in doldrums. There's nowhere else for them to take their money. India is a young India, growing India, Star India, Ho India, J-Ho and all that, and they bought everything here and they dumped it here. Now, China has woken up again. The funny thing is, China has just said, we will open up. We'll wake up. We will do something. What we're going to do, we do not know. But it's going to do different things. Like that, the vague thing they've said. And for that itself, there's so much cheer. So you can imagine when the Chinese government actually comes out with its blueprint and actually starts doing things, And if they do the right things which the market like, it can even push these things in the Chinese market even higher. That means more money will flood out of India. At that point in time, we have to be curious to watch to see what really happens. This is as far as the stock market is concerned. Right? This is one portion of it. That has got nothing to do with the sales and the results. Because in India right now, stock prices and earnings are going in different tracks. Okay? It's like meter gauge, bar gauge. It's like,
what was meet and bar gauge?
Meter is the train track was 1 meter, man. Less than a meter. Broad is the track would be broader than that. So you would have wider bogies sitting on those tracks. So those are the bogies which you see today, where you have berths on the side berth is there, and you have the main sleeping berth, right? That's how wide. In my days when it was a meter gauge, a narrow gauge, what will happen is that side drive won't even be there. You would only be walking there. Only this side was the sleeping side. So imagine how narrow the whole bogie was. Anyway, again, we digress. Teaching him history. So it's like that. There's no compatibility between earnings and stock price. Because stock price seems to be some kind of gambling going on there. Right? Each one is trying to pass the parcel to the next guy. Musical chair is going on, whatever you want to call it. Here, we are in another world. And the reason why I say we are in another world is, if you look at our stock market, like I said, you keep that aside, and if you look at these corporate earnings, they show a clear pattern. There has been a decrease in consumption in India for quite some time. Year on year, after COVID, if you see, we have been struggling to get consumption back up to where it needs to be. And to justify these kinds of prices, earnings have to be growing at 30%, 40%, 50%, some of them. And they're not growing at that rate. Especially in rural areas, if you see, that's where we spoke in another video about microfinance companies struggling, right? They're getting a lot of NPAs in rural areas. These small loans which are going, micro loans which are going, lots of them are turning into NPAs, right? They're defaulting. So that means there's a lot of stress in rural India. And 80% of India is in rural India. So you take all that into consideration, this affects. Now, that's where majority of the two-wheelers are consumed, which is consumed by the lower strata of society. So these companies which you spoke about are selling bikes. And these bikes are consumed by the lower strata of society. And those people are being hurting economically to spend money to buy these things. So this is very evidently reflecting on this. Now, what does it mean going forward? That is hard to say, because the simple reason is there is great opportunity for India to grow. Everything is not going to be bad forever. Like everything will not be good forever. Everything will not be bad also forever. So there will be some recovery happening. How much will that magnitude of the recovery be, and how much is it going to transfer into these corporate companies showing great stellar growth? We'll have to wait and watch. And as far as those electric scooters and electric vehicles are concerned, there's a huge question mark in that. Yes, people like it because petrol is becoming more expensive. Now, this Iran-Israeli war, petrol is going to become even more expensive. It's cheaper to have, if you are someone with very little money, to keep an electric bike, you go plug it in your office, then you don't have to pay for that power bill. Correct? You go anywhere to tea kada and you're plugging it in there behind his back, which is happening. So, the flip of it is these bikes are very unreliable. Like you saw in the case in point of Ola, what is happening there.
That's another part.
Yeah, another video there altogether. So, when you take at all this, you can see where the sales, why it's dampening. There are different aspects why bringing these sales down. As far as cars are concerned, that is mainly consumed by the other end of society. So in cars also you see a split. The so-called middle class cars, those are struggling. The cars which are doing very well, even Mahindra now is overtaking Hyundai and going to become number 2. If you look at their starting range of cars, those cars are starting to come with people who are at almost touching at the top 1% of Indian society. So the Star Rocks is what he's launched, which is what's propelling him. It's right between 13 to 23 lakhs, right? So if you look at this car, how many of us can afford in our office this car?
No.
And Mahindra has always targeted this, where he's not looking at the lower end of the car. His cars have always been people who are a little more willing to spend money are the people he's targeting. And that part of society has always been doing well. If you see all luxury products, luxury cars, that segment is doing well. That's why even iPhones are selling. You can imagine if Blinkit is putting ads out saying you can order an iPhone on Blinkit. Imagine ordering a 1 lakh phone on a delivery app like Blinkit, as if you're buying onions or potatoes. You can say, send me 2 iPhones, and you pay. 10 minutes later, the guy comes and drops the iPhone and goes. Amount of iPhones which are actually selling there, and who are buying it? They're not you and me. Are you buying iPhones on Blinkit? I don't think even Albin was looking at Blinkit when he was buying his phone. So there is a huge split over there. So if you see it, there is going to be recovery. How long and fast this recovery be in the rural areas and in lower parts of Indian society is something I have to wait and watch. And as far as stock price is concerned, that has got no bearings. Earnings has got no bearings with stock price right now in India. Because there seems to be complete skew. Because of what was happening in China, all the FIIs bought their money here, sending all these evaluations of these companies which were trading at 20 times, 30 times earnings to 100 times, 120 times, 200 times earnings. They pushed it all up there, like Titan and everything. Because FIIs didn't know where else to park their money. They need to park their money somewhere safe. So they parked it safe. Now China is looking like it's going to wake up again. They're all pulling their money out. So I would wait to see where true relationship between earnings and stock comes back to India. Probably next year this time when we see earnings will be very important to stock price. Because right now none of you investors out there are looking at earnings. It just looks like some noise. Media is going, Dhana is looking at it and saying, wow, who cares about earnings? Look at the brand. The great brand. Not so. It's all finally down to earnings and we'll come back.
The entry level segment of the shift 6 lakh to 7 lakh, that was struggling to retain the market share even in the level of the March 2020. But you said that the luxury car brands, so they are doing very well.
See, that's where Tata's is giving run for money for Maruti and Hyundai. Hyundai is hurting the same segment. That car segment between 5 to around 10 lakhs. Tata has been pushing hard over there. And it's hurting Maruti there and it's hurting our Hyundai is there. Mahindra is really not there in that segment. He doesn't care what happens. So it's interesting sector. But if you have time and patience, you can make money here. But if you buy it at the right price. Like Tata Motors is very cheap now, but nobody wants to buy Tata Motors.
So that's my last question. Now the auto index was coming down. So Bajaj Auto is there, Tata Motors is there, and Maruti Suzuki is there, Hero MotoCorp is there, and then TVS is there. So which one will be the valuable one right now?
You're talking about two-wheelers.
No,
You're talking
total
about
auto industry.
Total auto industry, I would only look at Tata's.
Tata Motors.
Because the reason is, like I explained in another video, they have become debt-free. Tata and Sons have become debt-free. So all the money he's going to earn, he can do what he wants with it. Last time around, he bought Chorus, he bought Jaguar, Land Rover, he went around shopping. Now you got a young kid who's, compared to Ratan Tata, he's young, he's come to the mantle. And he'll have to prove himself and he'll love this opportunity. And Ratan Tata has given him a great platform to hit it from. There's no debt. He has no bills to pay. Imagine you have no debt, right? Rent-free house. And all the salary that's coming in your pocket, you don't have to worry about food. Food is there on the table. You can do whatever you want with the salary, mummy says. Then you'll go crazy. That's what is going to happen with Tata. They're going to take their investment and they're going to do lots of things. First, it will probably be in a lot of unlisted companies, which they usually do, right? And from unlisted, they will move to listed companies, and probably they'll start listing some of their companies that are unlisted also to unlock more value for them. So watch out over there is what I would say. As far as Hyundai IPO is concerned, it is failed. It is not even subscribed twice. It's subscribed once. That means anyone who subscribed to IPO would have got it. Will be allotted. And that's going to be a nice video to do. Once the stock price is launched, it goes live, we will do a video on how wonderful it would have been if you invested in Hyundai IPO and how wonderful you're doing. And most of it is all gone off to anchor investors. And who are the anchor investors? Mutual fund house, you and me. Wherever you put money for SIP to these managers, they've taken your money and they've dumped it here. Again, I'm sorry, I tend to digress as I'm talking to Dhana. These are the kind of conversations me and Dhana have when the camera's not on. So that's the whole point of the podcast, is to kind of give you an insight in how me and Dhana think about our investing and the kind of conversations we have. So I hope you do find them useful and interesting as always. Thanks for watching the podcast today, guys. Have a wonderful week ahead. Diwali is upon us soon, and then it'll be the month of November coming, which is going to be even more interesting because the elections are there and Netanyahu's promised to show us his own fireworks first week of November. So that is also going to be rather interesting. I hope he doesn't, but right now I don't know if there's anyone in this world who can restrain Israel right now. Chalo. Thanks for watching the podcast and we'll see you next week.
Thank you.